demand for housing loans continued to remain strong, unabated.
Okay.
And we saw that reflected right through this quarter, and we see that reflected even now as we speak. Till 30th of September, our individual loan book, individual loans on an AUM basis. Now you can look at loans in three ways. One is on a balance sheet basis, the other is on an AUM basis, and the third is based on by adding back the loans sold in the last 12 months. If you look at it on an AUM basis, which is really the way markets and most people focus, our individual loan book increased by 18% compared to last year. Our total loan book increased by 17% and non-individuals increased by 13%. So individual was 18, non-individual was 13, total was 17. So that growth continued to remain strong. Non-performing loans came down slightly compared to June. June gross non-performing loans were 1.18%. September gross non-performing loans were 1.13%. Thirdly, capital adequacy has been strong. We had warrants which had been issued. Those warrants got converted into shares in this quarter. So capital adequacy currently stands at a very healthy 18.4%, of which Tier 1 is 17.1 and Tier 2 is 1.3%. And last but not the least is our provisioning. We have always been extra cautious, extra prudent, I would say, in making provisions. And we've always provided more than what the regulations require. So based on the regulations that the National Housing Bank has prescribed, compared to that, the actual provisioning we are carrying today is higher by 2,120 crores.
Great. When we talk about one of the elements in the financials, which is the expected credit loss, that has increased to 401 crore, which is almost the entirety of the 6 months ended September amount.
Let me explain this. We've always over the years, you see, if you look back historically, now in the new accounting regime things are different, but in the old accounting regime, every time we made any profit on selling any of our investments, as a policy, we used to put 30% of their profits into a provision account.
Okay.
Now, if you see in this year, we also sold shares of HDFC Asset Management, which got listed, which generated a profit of around 900 crores. So we have been extraordinarily cautious, extraordinarily conservative, extraordinarily prudent, whichever way you want to look at it, in terms of creating provisioning. So we had, for example, a loan to ILFS. It's not a loan directly to ILFS. It's a loan given against rental discounting. So ILFS has a property at BKC, that iconic property which you're aware of. A large part of that property, a large part of that building has been leased to third-party tenants, third-party, not ILFS or ILFS group companies. We have given a loan to ILFS where the repayment of the loan comes directly out of the rentals payable by the tenants.
Gotcha.
So it's not really an exposure to ILFS in that sense, but it comes out of the rentals. But despite that, as a conservative, on the basis of conservative accounting, we're carrying a fairly large provisioning for that. So we've over the years just kept creating more and more provisions for any kind of risk that would be there in the system.
So what is the amount of provisioning that you've set aside for ILFS?
ILFS,
are these the sole reasons?
We have ILFS, our loan was 390 odd crores, and we have about 37% provisioning on that loan, as far as I remember, 37 or 38%.
And that is the sole reason for the increase in impairment?
No, that is one of the reasons.
And the other is the HDFC and
we've been conservative and we've been providing more.
All right. Also, when we look at the profit after tax, most of it is we can say that it was contributed by the investment income of 1,000 crore that came into this quarter. If we kind of remove that amount,
but you have to look at the 1,000 crores in the consonance of the extra provisioning that we've done.
Yes, which is 401.
So that extra provisioning also then you need to remove. So you have to remove three things. You have to also then take into account dividend. Because we receive dividend from HDFC Bank, which normally comes in the second quarter. But this year that dividend came in the first quarter. So when you're comparing the second quarter of this year with the second quarter of last year's second quarter had dividend income from HDFC Bank, which was over 400 or little over 400 crores. Okay. This year there is no dividend from HDFC Bank. So when you're comparing with the previous year, you need to remove the dividend from the last year's figure. So if you remove the dividend from last year's figure and you remove the profit on sale of investments, then the adjusted profit has grown by 25%.
Also, you are positive on housing, and that has grown for the company as well. But when we look at the overall picture, do you see signs of a slowdown in the housing finance for housing finance companies? And also, if you can give your outlook on the loan against property section
I can't
as well.
comment on other housing finance companies, but I can comment on our
broader
own
market.
self. When we look at our own business, we see that the structural demand for housing in India has been strong, and in our view will continue to remain strong for a very long period of time. There are several reasons which give us confidence in believing that the growth that the sector has seen for the last so many years is something that will sustain for several years. The first is that housing in India has become a lot more affordable compared to what it used to be. And this has happened because income levels have grown faster than property prices, making housing more affordable. Secondly, the penetration level of mortgages in India is extremely low. The mortgage to GDP ratio in India stands at 10%. In the US, this ratio is 63%, UK 68%, China is 22%, India is only 10%. Thirdly, the Indian government has been extremely focused on the housing sector and has given lots of incentives to the housing sector in the expectation that by giving a boost to the housing sector, effectively you will give a boost to all the core sectors in the economy: cement, steel, power, paint. All of these get a boost when housing gets a boost. Also, housing creates a lot of jobs: construction workers, masons, carpenters, plumbers, engineers, and so on and so forth. And that income that they earn, the money that they make, they ultimately consume, and that consumption leads to economic growth. So therefore, the government has given both fiscal benefits for housing loans and also has a subsidy scheme. And I think the most important factor, which is very structural in nature in India, is the demographics. 2/3 of our population is below 35 years of age. So India has a very large young population. And unlike what you see in the US or in the UK, or for that matter in the Western world, in India people do not go and buy a house when they're in their 20s.
So what would be your growth outlook then for the housing finance?
On growth. I would say that the growth that the industry has seen over the last 5 years is something that can sustain for a very long time.
Even for HDFC, would that be correct?
Of course it will be for HDFC also. Why would it not be for HDFC?
As in higher than the market? Or
no, that we don't comment on. We don't comment on future growth. But the structural demand for housing will be strong in India, and HDFC will be an important player in that market.
One question on the funding for NBFCs. That, because of the current market conditions, has been a little volatile. Most NBFCs we are seeing are now approaching public deposits in banks for borrowings. How do you see the cost of funds increasing, and what do you think would be the implication on spreads because of the increased borrowing from banks and public deposits?
As costs of funding has increased over the last 6 months, not necessarily today or yesterday. Today's funding cost is not going to be very different from what it was a couple of weeks ago. But if you take over the last 6 months, funding cost has gone up, and so has lending rates gone up. So spreads have remained stable. Our spreads in the September quarter were 2.28%. Our spreads in the June quarter were also exactly 2.28%. Individual spreads are 1.91%, non-individual spreads are 3.11%.
Also, you're coming out with your own non-convertible debenture. October 29th, I think, was when it happened.
How do you money? See? Yes. This is an ongoing exercise.
So how do you see the funding conditions in the market right now for NBFCs? Have they tightened a bit, or is it?
To my mind, when we want to raise money, we can raise money. We have a variety of sources through which we raise money. We raise money through debentures, we raise money through bonds, we raise money through external commercial borrowing, we raise money through masala bonds, we raise money through the mutual fund.
But would debentures be the preferred instrument for some time?
No, not necessary. It could be a variety of a whole host of other funds. International funding could definitely be one of them.